Welcome to the Riskwiser Zone. I'm your host, Louis. We're starting off with a look at the precious metals market, where gold and silver have been making headlines with their record-breaking prices. The rally in these commodities has been fueled by a combination of global economic uncertainty, expectations of interest rate cuts, and strong industrial demand, particularly for silver. In India, the surge in gold and silver prices has had a significant impact on the stock market, with companies like MMTC Limited seeing a substantial boost in their share prices. MMTC, a government-owned trading enterprise with a significant presence in the import, export, and domestic trading of precious metals, has seen its shares jump over 10% to an intraday high of R71, extending a 7-day winning streak. This sharp rise in MMTC shares is attributed to the strong rally in gold and silver prices, which have touched fresh record highs in both domestic and international markets. The company's joint venture, MMTC PEP India, refines and retails gold and silver bars and coins for investors and jewelry retailers, making it a key player in the bullion segment. As we analyze the market trends, it's essential to consider the technical aspects as well. The 14-day Relative Strength Index (RSI) for MMTC stands at 67.1, indicating that the stock is approaching overbought conditions but has not crossed the threshold yet. Additionally, MMTC shows strong bullish momentum, trading above all 8 key simple moving averages (CSMAs) from the 5-day SMA to the 200-day SMA. We'll continue to monitor the developments in the precious metals market and their impact on the stock market. For now, it's clear that investors are betting on higher volumes and an improved earnings outlook for bullion-related stocks. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show and we've got some exciting stories to share with you. Let's dive into the world of finance and see what's making headlines. We've got 2 interesting stories for you today. First, let's talk about the Indian stock market. As we approach the end of the year, the market seems to be in a holiday mood, with limited action on the index front. According to Rajesh Bhosale from Angel One, the Nifty has dipped below the 26,000 mark, reflecting the lack of strong directional cues. He suggests that investors should focus on stock-specific opportunities rather than chasing broad-based moves. Bhosale also shared his insights on specific stocks, including Tata Steel and HPCL. He believes that Tata Steel is a good buy with a stop loss of 169 and expects it to move towards its recent high level. Similarly, he thinks that HPCL is showing signs of strength despite the broader market's sideways trend and can be bought with a stop loss of 464. It's worth noting that the metals space continues to stand out, with Tata Steel being one of the top performers. On the other hand, the banking sector is consolidating, with Bank Nifty respecting well-defined levels. As we navigate these complex market trends, it's essential to remain patient and selective. By focusing on stock-specific opportunities and avoiding broad-based moves, investors can make informed decisions and minimize risks. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at the Canadian banking sector. It's been an interesting few days for the Big Six banks, with several announcements that have caught our attention. First off, Royal Bank of Canada, RBC, and Toronto Dominion Bank, TD, both reported strong quarterly earnings, driven by robust capital markets activity and solid volume growth in Canadian banking. This is a testament to the resilience of the Canadian economy, despite ongoing concerns about U.S. trade policy and tariffs. Meanwhile, Bank of Montreal (BMO) saw its profit rise thanks to a rebound in deal-making and stronger equity markets. The bank's capital markets unit was the biggest beneficiary of this shift, with profit more than doubling to C$521 million. It's worth noting that BMO has been reshaping its capital markets division through new appointments and job cuts, so it'll be interesting to see how this plays out in the coming months. TD Securities also lifted its price target on BMO to CC 184 from CC 182, while keeping its rating steady at hold. This suggests that analysts are cautiously optimistic about the bank's prospects, despite some lingering concerns about loan growth and credit quality. We've also seen some dividend increases from the banks, with TD announcing a 3% increase in its quarterly dividend to CTI 108 per share. This move signals confidence in the bank's growth and earnings power, according to CEO Raymond Chun. Now, it's worth noting that while these developments are positive, there are still risks on the horizon. The US-China trade war continues to cast a shadow over global markets, and there are concerns about the impact of rising interest rates on consumer borrowing and spending. As always, it's essential to approach these investments with caution and do your own research before making any decisions. While the Canadian banks have shown resilience in the face of uncertainty, there are no guarantees about future performance. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.